Alrighty, what's going on, everyone? Welcome. Today is Thursday, August 27th, 2026. Now, today was a difficult one, so if you struggled, that's fine. Okay, as did I. I took two losses within the opening range, and then finally, I was able to capitalize on a nice long position. I technically took another two trades, but I really just counted as one full trade because the draw was all the same. The move and the idea of the move was all the same, which we will get into talking about. But yeah, like I said, today was a pretty difficult day. Okay. If you struggled, don't place much emphasis on a day like today because remember, what did we have? We had Jackson Hole Symposium today, and it was the first day, day one. And historically speaking, Jackson Hole Symposium is not the greatest time to trade. ICT talks about this. It's one of those rules that you must have written down in your trade plan. Jackson Hole Symposium sucks. And the type of price action that we saw was expected. Okay. Jackson Hole Symposium has a typical profile of seek and destroy, which it's not impossible to trade, but it makes it extremely difficult, especially if you're new, especially if your understanding of ICT is just inversion fair value gaps and liquidity sweeps. Okay, you're going to struggle on a day like this. Now we're taking a look at the daily chart, and as everyone knows, I have been toggling set information because I've been keying up on this buy side imbalance, sell side inefficiency. The reason why I like this level is because it is larger on the set interval. If I go ahead and take a look at what it looks like without set on, right, pay attention to this small little volume imbalance right there at the bottom. You can see there is a tiny volume imbalance that exists in between these two candles' bodies, but it isn't as exaggerated. And that's what I want to key up on is the over exaggerated inefficiency because the algorithm tends to reference these levels more often. And what am I doing? As always, I am plotting the octants. Always plotting the octants. I've pretty much moved away from plotting quadrants unless the inefficiency is super small. That's the only reason why I will reference that. Now, I did outline this bearish suspension block when I was trading, but for simplicity's sake and for the sake of keeping charts clean, I won't outline this entire level, but this entire inefficiency was sort of my draw for the day. I was anticipating that price was going to keep grinding higher and higher and higher until we overlapped all of this level. Now, or all of this inefficiency. Of course, with the benefit of hindsight, we got nowhere close. But understanding that this is the draw helps me frame direction in the marketplace. This is how you begin to build a bias. In my opinion, you really couldn't frame lower prices on this daily chart. It just makes no sense for us, considering the fact that we have now expanded away from the midpoint of that daily buy side imbalance, sell side inefficiency, as well as expanding away from this bullish breaker block. Those are indications of strength in the marketplace. And the more often you pay attention to price action, you'll actually see formations like this occur all the time where we have, a stacking of bissies. Price trades down, it looks like it's going to reverse, but then it starts to stall and accumulate inside of this significant level. And you can see, we're following through. So at this point in time, I would reasonably expect for us to just, take out another form of buy side. Are we going to go to all time highs? I have no idea. But in the meantime, we're definitely working higher. The bias is definitely, higher prices. I'm just going to turn that down. I don't know why it's bugging me out. But I'm hopping to a 15-minute chart because I'm trying to get an idea of what price action looks like. And just for the sake of it, bracket off I'll bracket off 11 a.m., right? So this is the information that we saw for the New York AM. Now, if we're zoomed out here, okay, and if we zoom out just a little bit more, where in this chart does price look smooth? You can make a case for a few areas in price action, but I'm talking about the areas in price action that are still smooth and haven't been made jagged yet. We got these highs up here, okay? Oh, wow. I really liked these highs because look how clean they are. You got one, two, three, four swing highs that failed to take out this high right here and this high up here. This is clean. This is smooth. The market is going to continue to march to these areas until they are made jagged. And I like this buy side liquidity pool because remember what I outlined on the daily chart. I said that I liked that bearish suspension block, or if you didn't utilize set interval, right? The daily SIBI, I really liked this area as a pertinent level because the daily suspension block and the daily SIBI were acting as my draw for the morning session. So if that is my draw, then that means targets that are subordinate to that draw should be what? They should be easier to reach, which is exactly why I'm outlining this as a buy side liquidity pool. Not to mention, we also had a ton of trend line buy side leading up to the relative equal highs. So that was sort of the idea when I'm looking at the 15-minute chart. Not to mention, if you're looking at this for my market maker sell and for my market maker sell model traders or my market maker buy model traders, we take a look at this on a 4-hour chart. Okay, or actually, we'll take a look at it on a 1-hour chart. Take a look at how clean this looks. This looks exactly like it is in the drawings. We have the sell side of the curve. We have a quick stab lower than what? Smart money reversal. And you can see we have pretty much been ensuing in the buy side of the curve for the market maker buy model. So we're in a higher time frame market maker buy model. To what? Well, to original consolidation. And this up here happens to be our quote unquote original consolidation, right? But heading back to the 15-minute chart. So pairing the understanding that this is original consolidation, we have clean relative equal highs up here. We have the daily suspension block above, which is acting as our quote unquote draw for the day. And the fact that we are inside of this larger time frame market maker buy model, we can reasonably anticipate that we're probably not going to work lower today and that we're probably going to work higher. Or at the very least, if we do want to work lower, we have to take a measure of buy side out first. And that the price action that we had today was sort of indicative of this exact idea, us being in this market maker buy model. Okay, price finding support inside of discount inefficiencies, which we will talk about in just a second. Hopping to a 5-minute chart. Now, just for the sake of it, I am going to outline this new day opening gap, which I'll go ahead and annotate it right here. So here's our current new day opening gap. And what are we going to do? We're going to bracket it off with octants. And we'll place a bit of emphasis on that in just a second. But if we're bullish, the idea should be simple. We should find support within this new day opening gap. We should. This low down here, that should be protected. Why? Well, we're in a market maker buy model on the higher time frame chart. Okay. Lows should be left intact. Highs should be breached. We have this discount inefficiency. And yes, even though it's overlapped, it is still used. Okay, even if it's overlapped once, twice, 3 times, the algorithm will reference these areas in price. And it's the current new day opening gap. And the thing that I like about it is take a look at where this new day opening gap overlaps on. That upper octant of the daily buy side imbalance, sell side inefficiency. Remember, I made a video on my Instagram explaining how to choose the correct levels, right? I always get that question. How do you choose the right inefficiency, the right PD rate? It's the ones that form over top of the quadrant and octant levels of higher time frame PD rays. That's one sure way to validate any PD ray that you're looking at. Okay, if it forms on an octant or quadrant level, chances are you're right. If it doesn't, chances are you're wrong. Really, really simple. Now, let's hop to a 1-minute chart to get a look at intraday, real intraday price action. So, taking a look at this, and I'll actually rewind just a bit more to 929. So, this is exactly what the market looks like right here. This is what the market looks like ahead of the open. Now, I have a question. We're looking at this chart. What do we see? Okay, if I zoom out, what do we see? Well, these highs up here Way too smooth. Way, 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 way too smooth. And the fact that we already have discerned a clear objective on the 15-minute chart, that being these relative equal highs, all of this buy side right here makes so much more sense for us to make a run on it. So we have a higher likelihood, a higher degree of likelihood to run out all of these highs more than we do to run out all of these lows down here. And it would also take a lot for us to get all the way back down there. But narratively speaking, we're already anticipating higher prices. So all of these highs, it's just it's almost like an easy target, if you will. But look what else we have, right? We do have a measure of sell side. We have clean, super, super clean relative equal lows, right? We also have some relative equal lows right down here, which is nested above the current new day opening gap. Now, this is something that you need to definitely write down if you don't already know this. But if we're expecting a move higher in relation to the power of three, what would you reasonably want to see? You would want to see manipulation lower first to take out any sell stops that are resting beneath all of these lows so that it has the necessary liquidity and the necessary fuel to do what? To send it to the clear buy side objective that we have up here. That we have outlined as the draw. Okay? So price trades, ends up trading down, and I'll just let the rest of the session play out here just for a second. But I ended up taking 2 losses within this price action, okay? And I'll explain them real quick. So the idea was we've swept out sell side, we found support inside of the upper half of the new day opening gap, and now we're trading higher. We saw us respect this buy side imbalance, sell side inefficiency. We saw us respect this bullish breaker block. So price is trading higher, and we end up creating this bullish suspension block. Okay. And this bullish suspension block is what I was looking to get long off of. And you can see with the benefit of hindsight that after we take out this high, price does what? We trade inside of it, and then we just trade completely through it. Now, here's what I'll say. Yes, this did not deliver. But I have to chalk this type of setup and the failure of it delivering to the fact that we had Jackson Hole Symposium today, and that we should have been expecting seek and destroy regardless. Because if this forms right here, if this exact price leg forms on any other day where we're not expecting extreme manipulation and terrible price action, this is delivering 100% of the time. This move right here. But why does it fail? Well, it fails because number one, I was wrong. And number two, because it was on the day of Jackson Hole Symposium, right? And that was really just the biggest thing to be taken into consideration with this. And that's exactly why this fails. But this was a beautiful setup. Expansion above this high, which shows that we're clearly bullish in terms of market structure. An expansion and a close above these highs, which should have acted as a point of resistance, but we closed above. So that right there, that's beautiful, right? That is exactly what we want to see. But instead, price had other ideas, traded lower, back inside the new day opening gap. But see, this failure, okay, to get through that and this displacement higher led me to believe that we were going to treat this sell side imbalance, buy side inefficiency as an inversion, okay? And I was looking to go long, I was anticipating an inversion, but what does price end up doing? Price ends up utilizing this level that I previously outlined as the true inversion, and it ends up running out this low and these lows down here. Okay, and all of these lows are ran out, clean relative equal lows. You can see we end up overlapping the current new day opening gap, but we end up making our run higher. Now, here's what I'll say. These 2 losses for me, fine, right? In my opinion, in my eyes, they are good losses, and there are losses that had to have been accepted and anticipated heading into this trading day because what? Because I knew that the underlying risk was we were going to be in low probability conditions because of Jackson Hole Symposium, which is exactly why I managed risk accordingly. All right, now I have a pretty fat buffer on my account, so a lot of you may have been confused as to how I was able to risk 1 mini per trade, but um Obviously, with the fat buffer, it allowed me to take those 2 losses and still sit pretty comfortably. Now, at this moment in time, it ends up trading down to the low of the current new day opening gap. And then what? Right? Well, we sweep out this low right here, but we also find some support inside of this buy side imbalance, sell side inefficiency. And then we start working higher. Now, if we take a look at the 15-second chart, okay, we take a look at the 15-second chart, we start trading higher, okay? You can see what ends up getting created. Okay, we end up getting a nice little buy side imbalance, sell side inefficiency on the 15-second chart, which if you guys go to the video that I did post on my Instagram, this is exactly the long setup that I looked at. I was anticipating for all of this price range to be turned into an inversion. I was expecting for all of these inefficiencies to provide support. And that's exactly what ends up happening. Now, of course, you did see me take my execution on the 1 minute. But this right here, this is a typical characteristic of a seek and destroy profile. So whenever you have a seek and destroy profile, this is typically what happens. It creates that swing high, works lower, right? Looks like it's going to go lower. Then it completely reverses, takes out that high. And then this is exactly how you're able to identify that we're in seek and destroy. Okay? Is exactly like this. Right here, this BISI that's created, or this bullish suspension block that's created, if we are going to deliver decent price action, we're actually going to have a sustained price run, this should have delivered right away. But instead, what happens, it completely rips through all of the inefficiencies range and revisits all the way down here. And yes, we have a bit of a retracement back up, but we eventually reach this low. That should never ever happen. The moment we reach that low tells you what? That we're in seek and destroy. And usually, this is how ICT likes to teach it. Usually, whenever we have seek and destroy profiles, price usually likes to engineer both sides and it takes out both sides before it then runs higher. Now, something I also do want to highlight, okay, as price trades beneath these relative equal lows, so it's booked enough sell side in order for us to work higher. Okay, that's number one. We respected the low of the new day opening gap. That's two. We've swept out this low here that's nested inside of these buy side imbalance, sell side inefficiencies. That's 3 and 4. Okay. We are forming at this current time right here. You see this low? Okay, this low never ends up being swept on ES. Okay, so we have an SMT. Now, SMTs aren't something that I normally place a lot of emphasis on, but in this case, because it's a supporting detail and I'm already expecting seek and destroy price action and higher prices, right? This right here, this is something that I like to see. A nice little SMT, which if I go ahead and switch here, you can see what I'm talking about, right? That's a clear SMT. And then on the 15-second, you have a bunch of bullish PD arrays forming and bearish PD arrays being disrespected. Really, really simple. Now, I'm going to delete the new day opening gap because I want to shift our focus, and I'm going to clear out this sell side as well. But I'm going to shift my focus. I just want to draw out these drawings so that everything looks nice and clear. I need to make a video on it on Instagram. But you can see us really, really respecting this this little BISI's range or suspension block, really. Let's go ahead and draw this all the way out. And you can see us respecting it as such. I'm going to turn this into like a light gray. Okay. So we end up finding support inside of this BISI. We start working higher, and we're giving nothing but bullish signatures, which is exactly what I was already expecting. Mind you, in order to trust a setup like this, you have to have a predisposition that price still wants to run higher. All of this choppy back and forth seek and destroy profile does not, the seek and destroy price action does not make me abandon that these highs are the draw. These highs are still very clearly the draw, which is why I'm able to trust this setup still. But I want to bring our attention to the opening range gap. Now take a look at what we are respecting at the very moment we end up trading higher. Do you see that? We end up treating the consequent encroachment as a means of support. Now, yes, we color outside the lines just a bit. That's fine. Okay, that is fine. In fact, we could actually kind of expect that. I'm going to make this a very poignant color. But let me go ahead and draw out our octants here, octants and quadrants. Okay, so here's our opening range gap, and you can see what does price do. Price trades a little bit beyond the consequent encroachment, okay? Finds support inside of that buy side imbalance, sell side inefficiency on the 1 minute chart. I'm going to send this to the back, sorry. Find support inside the BISI, which overlaps with what? It overlaps with the 0.375 octant level of the opening range gap. We sweep out liquidity and these relative equal lows and all of these lows over here while simultaneously engineering so many low resistance highs. This is like clear as day that we're still bullish. Now, of course, most people were able to identify that we were bullish. It's just that we didn't get the right price action that we wanted to see. But now pairing all of this understanding, right? We're finding support and we just can't work any lower. That new day opening gap is playing a role in supporting price. The opening range gap, we have multiple 1 minute PD rays. We have multiple forms of sell side being swept, but buy side still engineered. And most of all, we have yet to reach the 0.75 quadrant level of the daily buy side imbalance, sell side inefficiency, while simultaneously still having that daily suspension block that's higher as a draw. So I'm sitting here and I'm still trusting this, and I'm allowing myself for one more entry with a tighter stop, which is exactly why I'm looking at the 15-second chart to provide support for us, right? And also take note of what time we're forming our entry, and we're forming this nice little thin price run. I've spoken about this so many times on my Instagram. Look at this, the 950 to what? 1010 macro. Okay, the 950 to 1010 macro. And take a look at where we form our low, right? Take a look at the time, okay, right prior to 10 a.m. That's indicative of something, okay? So what ends up happening? Price ends up trading lower into a bunch of areas where we're already expecting for support to be found during what? A very specific time where we would expect for price to begin spooling for liquidity and or inefficiencies. And there needs to be a narrative, there needs to be a bias. And what's the narrative? What's the bias? The narrative and the bias is that we're expecting longs because those relative equal highs are still way too clean for us to just leave intact. So you have this culmination, right? This alignment, this conversion. I don't even know if that's the right word, but you have this alignment of time and price and narrative. So now we're getting long and price ends up trading higher, okay? And we end up turning this into an inversion. So the anticipation of that turning into an inversion, bang, that's correct. Now, the moment we reach outside of this daily buy side imbalance, sell side inefficiency, after having all of these signatures occur at one moment, that tells me what? That my idea is pretty much solid and confirmed. Okay, the algorithm has told us where it wants to go now. This displacement shows us where it wants to go. We can have retracements, but it's shown us where it wants to go. And what happens? Price can't even get into what? Any of these inefficiencies. Can't even get into the inversion, right? And we have this small little consolidation, and then bang, right as soon as 1010 hits, we expand above these highs. Stop losses being rolled break even already. Stop losses being engineered beneath this swing low. Because why? Because this BISI that expands away from this range should provide support for us. Now, this is something for your guys' notes because I can guarantee most of you don't know this yet. When it comes to breakaway gaps, okay, breakaway gaps are gaps that form after it breaks away from a small, tight, compressed range. Take note of what happens right here. Now, that's not all breakaway gaps, but this is a very common signature of breakaway gaps. Take a look. So we have this already ensuing narrative. So you always have to have narrative. We're expecting higher prices. And we want to see price to provide strength in the marketplace. We want to see price act as a super strong entity right now. So it's working higher, and it's giving all of those signatures. So we know that we're bullish and we're strong. We have this small, tight little consolidation that happens right here. Okay, all of this price action, this little tiny range, this is a beautiful example of a balanced price range. This all right here, this is all balanced. It's all back and forth, bodies overlapping with bodies. That is a balanced price range. So, whichever side, and this always happens, you can go back in your own charts and see this for yourself. When you have an idea of what the narrative is, so you're already anticipating a specific direction in the marketplace. When the market breaks out of these small consolidation ranges, it will do it in a manner where it displaces and it creates a fair value gap. Okay. And that fair value gap, you usually want to see two things: either an institutional order flow entry drill, which is where the market trades into it and it can only trade into it by a wick and like only like one or two ticks beneath this low and it trades higher, or you just want to see it remain as a breakaway gap, meaning that it's not even left, it's left completely unopened. And technically speaking, an institutional order flow entry drill um, can still be classified as a breakaway gap, right? Especially if no bodies are left inside. This is something you see all the time. Anytime you see a small little consolidation range like this, usually a fair value gap will form as it breaks out of the range, and that fair value gap is what you want to see used as a breakaway gap, right? Because that signifies what in the marketplace? That it is strong, and we're already expecting higher prices in the first place, so it's like a supporting detail. Now, you're not necessarily going to take trades off of a breakaway gap or anything, but it's just something that you like to see when you're in price or when you're in a move. Now, let's say that we didn't form a fair value gap as we broke out of the range. What is that probably indicative of? It's probably indicative of the fact that we may reverse, right? Just a real nice, easy way to read order flow, to read price action. That's exactly what it helps you do, is it helps you read order flow. And you can see price pretty much fails to reach inside of it, okay? And we end up consolidating again. And then what happens? Price ends up trading lower. Okay. And this right here, this was a bunch of choppy back and forth price action. Really, really hard to hold through all of this. Ideally, we should have expanded all the way to the highs. We should have expanded above these highs up here, but instead we got right above and we stalled out. ES at the same time was sweeping out the high, but NQ wasn't. So it kind of looked like we were just going to roll lower, and it sucked. But this is typical Jackson Hole Symposium price action. I mean, this right here, it was really, really nasty. And in a perfect world, we should have just kept on delivering higher. However, take a look at what this has created now. We draw from the highest high and the lowest low of this current impulse swing or this current range. What do we get? We can draw out OTE, and right beneath equilibrium is this buy side and balance, sell side inefficiency, and what rests inside of OTE is that same exact BISI. So this BISI is still a high quality area for us to provide support at, or for price to find support at. And what ends up happening, we do end up trading lower inside of the BISI, and we end up doing what? We end up accumulating, and bang, we start reversing. Okay. And we end up respecting this order block right here, which is what? That's a propulsion block. So it's an order block that's nested inside of another order block, or an order block that rejects from another order block. And you can see we ended up expanding higher. And then, of course, we revisit the BISI one more time, and we end up completing our move. But at this point in time, I was already out, already secured payout for that, for the entire move. Overall, there's not much else I can say other than the fact that it was just a sloppy day. Okay, it was a sloppy day. It was Jackson Hole Symposium. If you guys took a loser today, or you took multiple losses, just please understand that this was expected. Okay, it was expected. It was disgusting, and it will probably be even worse tomorrow. So if you're someone who's looking to trade tomorrow, please be careful. All right. But what can we take away from today? Right? What can we take away from today's price action? Number one, if we're expecting seek and destroy like price action, sit out. Okay? That's something that I should have implemented, something that I noted in my journal. If I'm expecting seek and destroy profile type price action, I should anticipate for the initial high and the initial low to be engineered, and then the initial low and the initial high to be swept within that opening range. Then, once the initial high and the initial low swept out, then I can participate. And that's exactly what I should have done, because that is exactly what ICT teaches in his mentorship. Okay? So that's number one. Okay? Number two, remember, aligning time and price. When we have this convergence of time and price, PD arrays and liquidity agreeing with a very, very specific interval of time, then that probably means what? That we have somewhat of a winning idea. Okay. And also, another big thing that we can take away from a day like this, and this is something that I am going to be implementing in my personal trade plan heading into next year's August price action and pretty much all of summer's price action, is base hits. Right? When summertime rolls around, we have to take base hits. We absolutely, absolutely have to. You don't even really have to de-risk. I mean, de-risking is probably smart, but you have to take base hits, because if you're not, you're going to get chopped up and destroyed in this type of price action. August was definitely not the best price action for me, and I know that I speak for a lot of other traders when I do say that. But hey, listen, I mean, this for me is the final trading day of the month. Well, really, we have Monday, August 31st for next week. So, technically speaking, not the last trading day, but it's the last trading week of summer, and we can finally head into September price action, where price action will be much cleaner. Hopefully, fingers crossed. But yeah, other than that, hopefully you guys did find some insight in this. Not really much else I can say. But yeah, hopefully you guys enjoyed. Remember, I'm running a giveaway in the Discord. All you have to do, I'm running a giveaway for 8 Tradeify Select accounts. All you have to do is you have to purchase a 50K Select account using code T at checkout. Make sure you send me proof either in my Instagram DMs, Discord DMs, or you can just send proof in the proof submissions channel on Discord. That will get you entered into the giveaway for the chance to win a free 50K or 25K Select account. But yeah, other than that, guys, have a good one, and I will see you in the next.